Brian Wesbury is the chief economist at First Trust Advisors and the author of a new book. So tell me about this good that you're seeing versus bad here, Brian.
Yeah, sure, Carol. It's great to be with you. You know, first of all, just remember, back in January and February, we were losing 600, 700,000 jobs. We're now, on the last couple, 2-3 months, on average, about 150, 175,000 jobs a month. It's not good, but it's way better than it was. And I think the trajectory is that we're going to be gaining jobs by late, maybe December of this year, but early next year for sure. And the title of my book, by the way, is "It's Not as Bad as You Think." So that's what I think is going on in the economy now.
Well, Matt says, go ahead, Matt.
I mean, it's not as bad as you think unless you don't have a job, right? And there's only, what, 15 million people?
That's absolutely true. But, you know, see, one of the interesting things here is I graduated from college in 1981, where the unemployment rate in 1982 was higher than it is today. It was 10.8% in the fourth quarter of 1982, and yet we still ended up with one of the biggest booms in economic activity the world has ever seen. Between 1983 and the early 2000s, it was an incredible boom in economic activity with tens and tens of millions of jobs and standards of living rising and the stock market going up.
By the way, Brian, you know, you point that out, and it's true and very interesting. Are we in, though, for a change here? Is there a new normal, as PIMCO suggests, coming up?
No, I think this whole concept of a new normal, remember what it's based on, the fact that we're going to save more. Well, what's interesting is I ask people to go Google Nobel Prize winner, China, and savings rate. And what you'll find is that there's lots of Nobel Prize winners who believe China is growing faster than the U.S. because it saves more. And so how come savings is good for China, but it's not good for us? So this idea that somehow we're going to grow slower because we save more, it just doesn't fit anything we know about the economy.
All right, but maybe that doesn't happen. But what we do really need is for consumers to spend more to really get this thing. I mean, right now, everything that's been going on is thanks to the government, you know, in terms of all its stimulus programs. Unless we get job growth, though, Brian, we're not going to have a sustained recovery, are we?
Yeah, well, Carol, I totally disagree with that statement that everything that's going on is due to the government. It's just not true. In fact, remember that every dollar the government spends, they have to take from someone else. They have to borrow it or tax it from someone else. So, yes, people bought more cars when you had cash for clunkers, but that money had to come from somewhere else. So somewhere else there wasn't economic activity as a result. And so the bottom line is the economy is accelerating, and it's not all government.